Well, it was weak global cues and developments surrounding the India-Mauritius tax treaty that spooked sentiment on Dalal Street. You also had a rise in the US 10-year yield. Gold prices have been moving higher, so equities gave back a little bit. The sensex lost nearly 800 points. The nifty lost over 200 points. However, the frontline indices ended flat for the week. On Editors Roundtable, we decode the key expectations from the fourth quarter earnings. We also take a look at the advantages for Biocon after UK regulators' approval came in for its weight loss drug. We will discuss why distributors are performing better than product makers. We'll also tell you why global market observers continue to be bullish on India despite the concerns on the globe. I'm Sonia Shenoy, and joining me, Nimesh, Nigel, Ekta. We also have Pankaj Muraka, the CEO and CIO at Renaissance Investment Managers. Folks, well, it's been a really action-packed week despite having that midweek holiday. Friday was not great. You had the markets come off a little bit, and there are now some global concerns that are emerging.
Absolutely.
Right?
So what has Friday done, Sonia, is it means that for the week, the Nifty and the Sensex are flat. So we gained for the first 2 days. We had a midweek holiday, and on Friday we just gave up everything. So literally in flat from a market perspective. But as you rightly pointed out, now there are some fresh concerns on the global market. The bond 10-year has crossed 4.5. And again, the feedback from the CT is not every asset class can go up, right? Crude is going up, metals are going up, gold is going up, and equities are going up. Generally, it doesn't happen. So something has to go up. Maybe this is a week when equities have given up a bit. And par for the course, right? We've rallied so hard. Markets have been the best performing market globally as well. So a bit of correction was round the corner. It was a Friday as well, so maybe a bit of profit booking as well.
And it's going to be interesting to see what the Fed is going to do next, right? When we came into 2024, we said in March there is an outside chance that they will cut. Then it was June. Now it is September.
Exactly.
So just kicking the can down, but
exactly.
It's okay.
Talking about the macros, we have the India CPI data, which is out this evening, and it's going to possibly be a sub 5% figure. So I think that will be important to watch out for from an India context. Yes, it's this figure, and then we have Brent at $90 per barrel, so that's probably going to change the dynamics. But for now, that should be a good figure.
Absolutely, and there's some concern. Right? Pankaj, thank you for joining us on the show. Now people are sitting up and saying, okay, gold prices are rising, the US 10-year yield is rising, there are geopolitical concerns. Should we be worried about this rally halting? What's your view?
I don't think so. I think we are in the middle of a bull market. It's a matured bull market, but having said that, it's a ferocious bull market. When we say that India is the best performing market, I think there are fundamental reasons for it, right? In an environment where globally economies are challenged, half of Europe is already in recession, and the other half will slip into recession during the course of this year. India is an outlier with 7%, 7.5% growth. So, and if you look at valuations from a broader market perspective, we are still very much in line with last 15 years averages. So the point I'm trying to make is that the rally in Indian markets is very much supported by underlying fundamentals. There could be pockets of fraud, especially in mid and small cap, where one should be careful. But otherwise, I don't feel concerned about the larger, broader market. I still think this bull market has a long way to go. My assessment, we started this bull market in March 20, right? The first day of the lockdown was the bottom of equity markets. Yeah. So we are 4 years into this bull market now. My assessment, we are somewhere in the mid-cycle of this bull market. So we still have second half of this bull market to play on.
Okay, we are somewhere in the mid-cycle of this bull market.
This will be music to the ears, right? I mean, middle of the bull cycle, so
but actually, to be honest, despite all the negativity around global markets, Indian market observers are still very bullish on India. We'll talk about that later.
Absolutely.
But as we kickstart the earnings season for the fourth quarter, Nimesh, you've put together some data for us?
Yes, so this I've been doing for the last few quarters now. That before the earnings season, I just put out a piece on what to expect in quarter four. So firstly, let me put out the headline numbers first. It's going to be a tepid on the top line. But on the margins, it's going to be the fifth quarter of margin expansion for large part of the companies. In fact, the margin expansion could be 115 to 150 basis points. That's the consensus among brokerages. Now, a revenue growth of 5%, EBITDA growth of 11%, and PAT growth of 9%. So both EBITDA and PAT largely in double digits. So that's again a good thing as far as earnings are concerned. In terms of sectors, consumer discretionary and industrials are largely set to outperform. So that's the overall picture. Now let me come to the individual sectors. First is technology. It was expected that on a constant currency terms, the top 5 companies are going to report a muted revenue growth. TCS was the case for that. But Infosys and HCL Tech's guidance will be the key for the technology sector. Coming to the banks, now again that's a large sector, but the commentary on the NIM will be a very important thing. Last quarter also we said that there will be NIM compression. So how much further is what we need to see in terms of commentary for banks. Within the autos, it's going to be a very, very strong quarter. So 20 to 40% PAT growth is expected for the OEMs. And again, the guidance will be pretty much key there. Energy, another large sector, and a lot of stocks have outperformed as well. For the OMCs, it's going to be a strong quarter, largely on back of higher refining margins as well as inventory gains. Even the city gas companies are going to do good volume growth. But to me, the stock to watch would be GAIL, because that's going to be a big beneficiary on the gas price. So that's something to watch out for. Cement, sequentially a bit of a decline in terms of EBITDA per ton. Metals, again, going to be a soft in terms of volume growth, so not much to expect there. Even in pharma, it's going to be quite mixed. The domestic will do well, but within the US markets, the sales except Revlimid would be very important to track. So again, it's going to be a bit mixed as far as pharma is concerned. Capital goods, a very, very strong quarter across the board. In fact, most of them are expecting a 20 to 30% PAT growth for most of the capital goods companies. And the last one is consumer staples. Again, it's going to be a very soft, tepid quarter, mid to single-digit growth in terms of volume growth for the consumer names. So again, not much fireworks there. Now let me come to some individual names and stocks now. Citi puts out this note every quarter, and they give some positive and negative surprises. In the positive surprises, watch out for Maruti. Higher operating leverage would mean there could be a big surprise on the margin, so that's something to track. ICICI Bank can again surprise in terms of growth, so that's something on the positive side. Ambuja Cement could be a big surprise on the cost efficiency, so watch out for Ambuja Cement on that. Exide, all commentary on the lithium plant would be very important to track for Exide. And Nomura, of course, all the wealth businesses have done well, so expect Nomura to report good numbers. However, there are going to be some negative surprises as well. Citi believes that one of the big negative surprises could come in M&M, and that's because of the product mix. There could be a margin impact as well, so that's something to track in M&M. Page is again expected to report a subdued quarter in terms of volume growth as well. Titan, there is a risk of further competition from the payers, so there could be some margin pressure on that as well. Dr. Reddy's decline in the US based portfolio could be a bit of a drag, and HDFC Life can report a negative surprise in terms of VNB margin. So these are a few negative surprises as well. But as I said on the headline, a tepid top line growth, but a big expansion in margins is going to continue in Q4 as well.
Okay. Well, Pankaj, I just want to bring that point forward about margin expansion, because now we're dealing with Brent crude at $90. We're dealing with commodity prices which have risen as well. Metal prices are on the rise. Do you think that this margin expansion is probably just going to be limited to this quarter, and next quarter onwards we're probably going to see pressure?
Yeah, I think so, because all through this year we've had significant margin expansion across sectors. So probably now we'll have the base effect also kicking in. But having said that, I still think we'll have very strong revenue growth going on to the next year, because I remain pretty optimistic on outlook for growth. If you look at this quarter's numbers, what is startling from what Nimesh was mentioning, is you'll have the best quarter from capital goods companies, and one of the sectors which will have the worst quarter is consumer companies. And it's a reflection of how it has been post-COVID.
Big shift from consumer to manufacturing.
Exactly. I've been saying this decade in India, the growth is led by investment cycle. So capital goods as a sector will be the best performing sector, and consumer as a sector will be the worst performing sector. And if you just relate it to what was the case last decade, the previous decade was exactly the opposite. Because the decade was led by consumption and the investment cycle was completely missing.
Okay.
So I still see margin gains coming for companies going into the next year, but I think those margin gains will come from operating leverage than from raw material price correction.
Okay, got it. So we're also going to talk about a lot of specific stocks, right? And as we were telling you earlier, Biocon has risen almost 10% from the time they got approval for diabetes and weight loss drugs in the UK and at the end of March, right? So how big is the opportunity?
Well, yes, Biocon has been in focus because they have recently received approval from the UK for one of those weight loss drugs, liraglutide. Now, they have received approval. They are the first generic company to actually receive approval in the UK for this particular drug. The diabetes drug market size is expected to be around $425 million. Now, just to give you a sense in terms of the landscape for weight loss drugs, there are these GLP-1 drugs, and liraglutide is a part of that. The others include semaglutide as well as dulaglutide. The famous brand names are Wegovy and Ozempic by Novo Nordisk, Mounjaro, Zepbound by Eli Lilly. Now, around 8.8 million people used GLP-1 drugs last year. The market size is expected to hit $100 billion by 2030. That's the potential of these weight loss drugs. Now, just to give you a sense in terms of how much potential does liraglutide have as compared to, say, a semaglutide. Now, a liraglutide, the weight loss is expected to be less as compared to semaglutide, and it is also supposed to be taken more often than semaglutide, and hence that is the reason why people are not expecting it to be a huge money spinner for Biocon in the UK, though it shows the intent by the company is what analysts say. So the potential impact of this is around $30 to $40 million in terms of revenue, 5% market share, and Biocon going forward, showing that intent which analysts are talking about, expects peptides and GLPs to drive growth. Now, overall, they expect peptides to probably drive growth, which is GLP is a part of peptides, FY25 onwards. They expect to be a filer for liraglutide in the US also. They are eyeing the semaglutide market in big markets such as the US, as well as Europe, as well as India. Remember, semaglutide is a bigger market as compared to liraglutide. Now, in terms of the competition, that's the key point, because there are already 10 new drug applications for the generic version of the liraglutide in the US, plus the likes of Biocon, Sun Pharma, Dr. Reddy's, Aurobindo, Zydus. Any company, you name it, is working on some type of opportunity from semaglutide. Now, in terms of a nearer term opportunity, it could probably be India, because the market size is expected to grow to around 2,700 crores plus by 2028, which is for weight loss drugs. Right now, we only have the oral version of what Novo Nordisk sells in India. They could be launching the injection version, and eventually we could probably see a couple of companies enter when it comes to the weight loss market in India in the nearer term as compared to, say, the US or Europe. Let's in fact, discuss this a little more with Pankaj. Pankaj, what's your sense in terms of Biocon, and what can they probably expect from this particular drug going forward, and GLP-1 drug inhibitors?
GLP is a big blockbuster in US. If you see Wegovy, in terms of what has happened to the Eli Lilly market cap and Novo Nordisk market cap, is just phenomenal. So I think these are blockbuster drugs. If Biocon gets approvals, then it can certainly change fortunes for Biocon. As it is, it's been struggling for almost 3 years now. So I think it can have a significant impact if Biocon can really get going on this.
Anything else in the pharma news? Because there is a big report on Syngene and Newland and all from Goldman today.
So I'm a perma bull on the whole contract research story.
Okay.
Because if you look at the whole overall contract research, I think India, my view, I started my career as an IT analyst way back in 90s. I think this whole contract research space is exactly where IT was in India in mid-90s. We have a strategic advantage. You want to hire a graduate or a postgraduate in chemistry or biology. The same guy in US will cost you $300,000. The same guy in Bangalore or Hyderabad, you can hire for $50,000.
Correct.
There's a huge cost arbitrage.
Correct.
That can be split between companies here and the customers here. So with the same dollars, the global pharma companies can get more out of it. That was a starting point in terms of economics for IT services company when India was not a proven destination.
Okay.
I think you have the same set of strong economics for contract research. So there is no reason why, and given the kind of talent supply we have, in as much as we produce the highest number of IT engineers in the world, software engineers, we also produce the highest number of graduates and postgraduates in chemistry and biology in the world, which is we have not done a good job of marketing ourselves.
Sure.
By the way, since
what are
you
you
track
betting on
IT,
within that space? What are you betting on in that space?
So we like all of these companies at this point of time. We like Syngene because
Syngene is
broader
part of a
basket. We own Syngene in our portfolio. We've held it for a long period of time. I'm personally an investor into the company right from their IPO in 2016.
Okay.
So it has all the ingredients. I've said this. There's no reason why Syngene should not be a large cap over the next 10 years.
What about TCS? It's given us, they've come out with their set of numbers. The top line was more or less in line. Margins was a bit of a surprise. Your view on the tech pack and, how would you approach it? The large cap names may not grow as much, but they have great balance sheets. While the mid-cap companies, they could grow at a faster clip, but valuations as well are demanding. Your take?
So Nigel, let me break this in two parts. One, I think the worst is clearly behind IT companies.
Okay.
So from here on, we'll start seeing, every quarter we'll see improvement. This quarter will be more about margin improvements, but I think from the first quarter onward, we'll start see revenue traction coming in. Okay. The key highlight for me in TCS results is another quarter of very record order books, $13.5 billion. And for the full year, they've had the highest order book ever in their life at $43 billion.
Yes.
All of this will start flowing into the revenues from next year onwards. So I think the worst is behind for IT. So I am constructive on IT. More importantly, from my experience of last 26 years, because I go back to my early days in 90s as IT analyst, my expectation or my view, and this is corroborated by a lot of CEOs of IT companies that I talk to, they believe that this whole IT spend wave that we'll see over the next 5-7 years, which will be driven by AI, this will be bigger than any wave that we've seen in the last 30 years in the IT industry.
You know, in the last 1 year, distributors in various sectors have outshined the manufacturers. What does that mean, Nigel? And you have some data that you've put together.
Well, the distributors and the aggregators, they have done better than the OGs. You know, the original gangsters, so to call it. Now, the producers, manufacturers. Let's get to the wall and, explain this in further detail. I'll just pull up 3 charts. Three charts, and you'll see that in various cases, some of these distributors or aggregators have done much better. Case number 1, you have all the burgers and, pizza companies. They have not done as well as Zomato. That's point number 1. Point number 2, I'm looking at insurance companies. PB Fintech has done much better than some of those insurance companies as well. And point number 3 is DMart has done very, very well. And some of those FMCG companies, well, they're struggling. So clearly the distributors, the aggregators, they have done much better. Let's run you through the potential reasons out there. Few of them should come up for you on the screen. The pizza market, for example, it's around the 8,300 crore market. Just a short while back, a few years ago, the local or the regional chains, they had close to around 15% of the total market. That's jumped up to around 30%. Yes, Domino's is the dominant player there, close to around 5,000 crores of the total pie. But, it clearly shows that localization and regional chains, they are making their presence felt. And the delivery is growing at a faster clip in comparison to dining. So the play out there has to be Zomato, right? The other factor that's playing out is distributors can adapt to the customer preferences. You have so many of these new brands that are being showed on Zomato that you want to give them a shot. And the customer is willing to experiment, and the distributor is willing to, have some of those companies on their app, which is telling you why, in fact, you're seeing a great amount of demand for some of these local players, so to call it. The other few points that I want to look at, tremendous potential for distribution to grow. What is HUL's reach? Close to around 8 million to 9 million. What is Avenue Supermart's total number of stores? 365 odd. So there's a tremendous potential for Avenue Supermarts out there to add more number of stores and obviously grow their business. The competition is inevitable, but it could be delayed. This point is because of PB Fintech. Everyone's worrying there's going to be a big disruption. Yes, there will be a disruption, but maybe now it will be a couple of years ahead. The sheet was factoring it a little bit earlier. So that's what's worked in their favor. And also new businesses are getting added to the current business. Case in point being a DMart. If you've gone over there, I've looked at some videos on Instagram as well. They're talking about pizzas. There are some adjacent businesses that they've got into, like say pharmacy as well. So because the balance sheets are so good of some of these players, it's helping them get into business adjacencies. And finally, let's wrap this down as well. The management commentary has been good. Some of these companies, they were talking about growing the top line, but not focusing on profitability, not focusing on the return ratios. Suddenly that seems to have turned, and that's turned in favor of them. And finally, if I have an app, I don't want to download apps of various other players. I'll say, for example, I have a Zomato or I have a Blinkit. If you go on Blinkit right now, you'll see there are so many Navaratri offers, so to call it. A month or so ago, you were getting holy colors. You were getting those white T-shirts that you want to use as well. So adaptability, agility, and ability to, reinvent is something that's holds some of these players in good stead. So it explains why some of these distributors or aggregators have actually outperformed the OGs. Pankaj, I wanted your view on it. I mean, what's your view? Some of these companies people were not really interested in. And suddenly they have come back, and they've come back in style. Your view on it?
So what we are seeing here in the distribution space is a shift from unorganized to organized. Or when a Blinkit or Instamart or, when they are growing, they're obviously eating into the business of local Kirana stores by opening dark stores and so on and so forth.
Yes.
So we are seeing a massive consolidation in the distribution or in the entire distribution value chain, right from, let's say, the CNF to the retail store where the customer steps in, and with home deliveries and all of that. And this is happening across sectors. You take pharmaceutical distribution where you have organized chains coming in, you take food and grocery, you take lifestyle and beauty, and all of that. As these players get organized, what has also happened is now some of these players have got critical mass, by virtue of which they are trying to extract a higher piece of the value chain from the manufacturer. Versus otherwise what a small distributor can extract from a manufacturer. So there's also a shift in pricing power with larger distributors because they have larger scale, they have a stronger balance sheet, and they have a bigger muscle to negotiate much better with a lever or with all of these
Got
players
it.
and distributors.
And untapped potential as
And-
well. Okay.
yeah.
We'll do one thing. We'll take a short commercial break. On the other side, we'll talk about the demographic dividend play, right? And the fact that are we at a mature stage yet, and how can India capitalize on it? More on that coming up in a bit.